we are wrapping up the week, there is a sector and a number of commodity metals that makes sense to keep an eye on. We'll start it off with gold. Gold can be traded via GC. Gold can be traded via the micro gold MGC, GLD, and if gold is moving, we know we're likely going to see some good movement in GDX. Before we ever trade miners, whether that be gold miners or metal and miners, we want some clarity in metal. So this is going to map also then to GDX. This is going to map to XME. This is going to even map to, well, we're going to talk about CCJ today as we talk about uranium. Let's get to it. As we continue to see dominant green candles in GDX, it usually means one thing and one thing alone, that gold continues to move higher. And gold has the first handful of green candles that we have seen since a lot of the chop into late April, early May. We're starting to see the higher highs and higher lows bouncing out of the daily price movement range. And ultimately what we want to do is take advantage of gold pulling back to the daily price movement range, our historical volatility zone. Let me give you all another symbol to take a peek at for next week. Not just XME, but NEM as well. There we go, NEM as well. Definitely want to keep an eye on that one. The next up is, so if we're talking, and you might notice, okay, Rog, let's talk about silver. I've been getting a lot of questions on silver. Please remember, silver is a little bit like gold in terms of the precious metal, and it's a lot like copper in terms of manufacturing application, but it's really not the captain of its own ship. And while it is moving, I would far prefer to trade gold and gold miners, things like GDX, NEM. I'm actually going to put NEM in the GDX column because that is where it's heavily weighted. It's heavily weighted in the XME as well, but if I'm going to trade copper, I'm going to keep an eye on Freeport-McMoRan, all right? But if you're looking at silver, that's fine, but silver can be very, very volatile. We're going to be far better off focusing on, in a game of trade this, not that, focus on gold or copper. So let's talk about what copper is doing, because you'll be able to take advantage of a lot of movement that we're seeing in silver. But look, if silver can trade green into the gray area of the daily price movement range, perfectly fine. I would recommend, if you're trading silver, do it through the SLV. Silver futures can be very volatile. Copper continues to march higher in its uptrend, which is a lot of the reason why we're seeing so much strength in the XME. And while copper does not have a liquid ETF alternative, Freeport-McMoRan is probably one of the better places to use a proxy. In this case, the Freeport-McMoRan stock is a proxy to copper strength. We want to continue to look for opportunities to get long Freeport, well, when the green meets the gray. Next up is uranium. All right, what gives, Rob? Going to trade uranium? Well, there's not uranium futures, but the URA ETF. When that continues higher, we can look at URA, which has a pretty decent liquidity, amount of liquidity in terms of open interest on the option chain. But CCJ is a really great way, kind of the way copper and Freeport would have the connection. Uranium and CCJ have that similar connection. And so there's a lot to like in metals. And when we take a look, you might say, okay, Rog, where do metals rank in terms of strength? Well, look no further than where we are in terms of the 1 month performance. And where is XME? It has been stronger. It has been stronger over the last couple of weeks. You'll see GDX right up in here. You'll see XME right up in here. So while April was a little choppy for it, if you look at the 1 month and then start to move over to the month to date, and when we're about halfway through the month, I'll start looking at the month to date and look at where GDX and XME are. The last thing I'm going to mention is, aside from pedal to the metal, please do keep an eye on defensive sectors like utilities and staples. They are going to continue to be, as you can see right here, they're going to continue to be very appealing in an environment where there's a lot of uncertainty about what the Federal Reserve is really going to do. When all things are uncertain, Traders like to have exposure in places that are not tethered to indices, and XLP and XLU would be great choices for that. All right, that's where we sit as we wrap up the week. Keep an eye on those metals next week. They have absolutely been very strong performers because of the underlying commodities. Think about the way that commodity strength can filter down into the sectors and individual stocks. We're going to continue to keep that focus there. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.